Hello and welcome back. I'm that Jag girl, and today, day 7. Oh my gosh, we're talking about day 7 of our summer savings finance journal. Just as a recap, day 1, we talked about identifying money goals and values, creating a financial vision board and calendar. Day 2, we talked about finding your accountability partner, posting that financial calendar on your refrigerator, on your computer, on your desktop, on a cabinet, on a bathroom mirror. Day 3, we talked about prioritizing your debt repayment and opening a savings account. Day 4, we talked about setting specific financial goals. Start savings for the short term, right? We also talked about the SMART plan. If you're unfamiliar with the SMART plan, go back and look at the video for day 4 for more exciting information on that. Day 5, how long will it take? Lots of us ask that question. How long are we saving? When will we see, some type of results? We talked about that day 5. Day 6, we talked about creating an emergency fund and then also opening up multiple savings accounts. Day 7, we're going to talk about insurance, right? So oftentimes we have homeowners insurance, we have renters insurance, we have car insurance. When was the last time that you looked at any of those policies and those rates? So I think it's a good idea to review those policies and rates pretty often, right? Oftentimes things in your financial picture may have changed. Sometimes insurance companies may offer discounts for your home insurance, if you have a security system. Maybe you didn't have any type of security system when you initially got that policy. Sometimes insurance companies will, charge a particular rate based on your credit. Let's say that your credit report is slightly better today than it was a year ago when you got that policy. By having them look at the policy and the rates and everything again, it's possible that you could save some discounts. The property values could have changed in your area. If the property values have gone up, it is likely that your insurance has gone up as well. If you take a look and compare other companies with all of your information, it is possible that you may receive a better rate with that other company. So you just have to shop around. When we talk about renters insurance, or if we talk about having multiple policies with one carrier. When you talk about renters insurance, the same as with homeowners insurance, your rate is strongly driven by your zip code. Let's say you're renting and you moved to a different zip code. You call the old carrier, let them know your new address, and it's possible that your rate hasn't changed. Your rate has likely gone up. I would suggest calling another carrier, looking for discounts. Let's just say your landlord, or if you're renting from a property management company, that property management company or that landlord may have a relationship with a local insurance company. Maybe they send all of their renters to this particular insurance company, and maybe if you check them out, maybe give them all of your information, they run the proper reports for you. It's possible that through that other insurance company, again, your policy may be cheaper. But the goal is just to make sure that you're comparison shopping. When it comes to car insurance, car payments are really high these days. The term for car loans has increased. Finance companies, dealerships, banks, other types of lending companies, they're offering longer terms so that you will have a less payment. But oftentimes, if you have multiple cars on one policy, you'll get a discount. If you're moving your policy to another insurance carrier with multiple cars, it's also too a possibility that you may receive a discount for having multiple cars. So again, the goal is to make sure that you're comparison shopping. If you have a savings, any savings at all, of course, the idea is to take that savings and apply it to debt that you need to pay off. Again, as we discussed in previous videos, any little bit of extra money that you receive, if you're comfortable with making those payments, apply that surplus or that extra money that you now have sitting in your pocket or in your bank account, apply it to a debt that you're attempting to pay off early or sooner. If you're looking for, insurance on your car and you receive a discount, maybe apply those extra, the monies or the savings that you're earning from not having that higher insurance payment, apply that to your car loan. Just an idea, just something to think about. Now, the biggest ticket item in all of this, in most cases, is your mortgage payment. Oftentimes, our mortgage payment includes principal, interest, taxes, and insurance. If your insurance rate or your premium goes up, your monthly payment for your mortgage will go up as well. By comparison, shopping for homeowners insurance for your mortgage, it's likely that you can help control that monthly payment. You want to make sure that your monthly payment doesn't get so high due to your insurance that it makes you uncomfortable, that you can't make that payment, that you're missing a payment, that you could potentially go into foreclosure. So that's a great example of making sure that you're visiting and revisiting your homeowner's insurance at least on an annual basis. During that time, from 1 year to the next, let's just say you need to get your roof fixed. Let's just say you've added an upgrade to your home compared to other homes in your area. Make sure when you're calling the insurance company, the new insurance company, again, just to shop and compare rates and, find out how much you're being charged on your current policy and then how much the other insurance company will charge you. Just make sure that you're asking for from the current insurance company. It's called a declarations page or a deck page. If you receive that declarations page, it will let you know each and every line item, how much it is that you're paying. Also, too, one of the other things that you need to pay attention to are out-of-pocket costs. How much will the insurance company charge if you have any type of damage done to your home, you need to have a professional come out and fix the damage. How much is it of that money do you need to contribute first before that work is done? So again, that's something to make sure that you pay attention to. Sometimes that payment can be as low as $500, $250, and then it can kind of go up from there. Now, if your insurance policy, if it's a lower policy, but your out-of-pocket costs, the initial out-of-pocket costs for you are higher, I don't know if that's the right policy for you if you feel like it will be a burden for you to come up with that money to pay that initial payment if something were to happen. So again, just something else to, really think about when you're comparison shopping, especially on your homeowner's insurance policy. Thank you so much for watching. Don't forget to like and subscribe, and I'll see you tomorrow. Bye-bye.